Hey guys, it's Will. Hopefully you're having a great day today. In this one, we're going to be going into some of the companies that aren't being talked about in the AI markets. And we see some volatility to start this Sunday session. And I'm going to be breaking down some top AI stocks here that we're covering into this week. So today, just making sure that we're catching and walking through step by step with some of these companies. Very much looking forward to going over these with you all as we're jumping right in. So, a couple things to consider. Right off the bat when we're starting out in the markets this week, a lot of volatility. We saw large surges in almost every market into early to middle last week, with some large declines towards the end of the week in AI markets, in defense markets, in almost every market. And so, if you were to just kind of do a search right off the bat, let's say that you were to just open up, let's go ahead and just search, stock market, right? What you'd see is a lot of different things, right? You got third straight day is speculative silver trade unwind. So you have, I was just laughing because we posted a video on Instagram stories today. I was visiting with my mom today, and she bought this table that has a solid copper. It's all solid copper. It's like 1 inch of copper, and it was really funny. She was polishing it out and everything, and I was like, "Mom, this is great timing. Have you seen copper prices recently? I mean, you got a steal here. She got a really good deal on this table. It was like $200, but it was like a really nice table, and it was just solid copper. I'm like, that's pretty good. So, silver also dropped. We saw big surges in silver. Then silver dropped 30%. If you were to look at top stories, you got Dow and S&P futures are falling right now on Sunday night. Even with really good companies that reported earnings last week, you got some to look forward to here, including Google and Amazon. And then there's a federal shutdown, which is expected to end very quickly, but is still related to the defense markets. And so there's a couple things, just to preface, you could say, as we get into the markets and the analysis today. You have some macro volatility hitting, and that might pose some opportunities for not only limiting some of the downside risk, but at the same time capitalizing on some of the opportunities that are presenting themselves as we see some pullbacks. Just because we see red today and Friday and maybe even into tomorrow doesn't mean we won't see some really great buying opportunities in the next week or so. And we just want to be positioned well and also have a good position in the macro. So, defenses. You got defense companies, top AI companies to watch. One of them is definitely going to be Big Bear AI. We got Black Sky is on the list as well. CTM stock in the agentic AI, Palantir as well. But Big Bear AI, we've seen them pull down recently. They've pulled down after making a run from a $1 a share. This time in 2024, we were covering them, and they got up to $9 or $10 a share, and I've been holding them ever since this $2.80 level. So we've seen a lot of volatility, but you see them pull back down to this 200-day moving average, even slightly kind of breaking below that 200-day moving average as they have this overall uptrend. So some key levels to watch. You do have this very strong level of, you got a previous resistance here on Big Bear AI at around 460, and then that support level into September of 2025. Then you got November 2025, and then you have February now, where they're kind of selling back down around that $5 price point. So Big Bear is down, and you can see while they've sold down and they do continue to see some downward pressure currently, the opportunities are presenting themselves, right? We see this sell down here once again right at this support level. What do we see at market open tomorrow? Do we see a break in pattern and the markets continue to sell down, or do we see them capitalize on some of the movements? If you were to look at Big Bear AI here, let's see BBAI here, and also I'll pull it up inside of Prophecy. Let me get a analysis widget in here. You get some idea of where things are going with BBAI. And let's also get some financials pulled up. They really came out with some great earnings recently. And in their recent earnings that they came out with, one thing to note is as they continue to build their market cap now above this $2 billion market cap. I'm going to see the live chat so I can see you all. The AI services that they've been building have been in high demand. So, feel free to have some ticker symbols if you guys want to go ahead and comment. I would love to get in there with you on that analysis. But this is what you got. They came in with earnings last quarter and grew their revenue. They had their net income improving and their balance sheet getting up to $1 billion. So if there's one thing that we know in this AI market, that there's more funding taking place in this AI market. And so, for example, Big Bear AI, we saw them partner with Palantir. We know they partnered with Redwire. They're in the defense markets, but where they're focusing is in the national security. They have some shipyard related things. They have a Panama Canal solution that's monitoring the ports in the Panama Canal. But where it's interesting and where we've seen them really grow is that they've had deployments at major international airports. And so with their major international airports that they've recently deployed to, Big Bear AI has had a strong case for their AI. So if you look at their solutions, you can see they have modeling, they have digital identity management. This is their sweet spot. So if you've gone to the airports in the United States, you've seen that these have been very aggressively deployed. These new Veriscan technologies that have efficient traveler authentication. And the key here is not to, just chase hype on a stock, but to realize that a company like Delta or a company like Big Bear is working with Delta. They're working with TSA. They're working with some of the top companies in the world to get this technology out there. And if you were to look at some of the news, the financial news, yes, but if you were to look at their deployments of this Veriscan technology, where it gets interesting for them, and this is why we find them as a top AI company that could be potentially undervalued, is not that they're currently undervalued with their financials. That's not the case. Even down to $5 a share, they got $1 billion here in assets nearly, but their revenue is still flat around 33 million. So there's nothing there that really stands out. But if you were to look at their press releases and see the strategic deployments that they've made over the last few months, you'll notice that they've gotten into some major airports. They're at Chicago International Airport, Charlotte. They're at Dallas, Fort Worth International Airport. I just saw them there when I was traveling with my wife, Tammy. Denver International Airport, John F. Kennedy International Airport. You got Los Angeles, so LAX, Montreal, and Port of Seattle, along with Vancouver. These are large airports, and not only here, but they're at many others. And so the reality is you have the World Cup coming to the U.S., and the World Cup is not a small event. It's going to be huge, and they're going to have probably record-breaking numbers for the amount of immigrants that are going to come into the United States. And they might not be seen as immigrants, right? The foreign visitors. But that means that there's going to be a demand for really knowing what's going on. So, I've been looking at some of the projections. We did see some potential recoveries here on Big Bear AI, some green. I was also, pulled up on OpenAI, and I was getting some other projections. The longer term targets for Big Bear are that they actually get up into around a $10 to $15 range, and that's where we would look for them to potentially hold. Now, if you're looking at the nearest support levels, you're looking at the resistance, and you wanted to really see where we're at there. A couple things to note here. So we have some things we'll pull up that support and resistance. May have to make a slight change there. So you see that it's looking to use our normal support and resistance widget as some mock data, which I don't want that to be the case, which I'll fix. We'll have that taken a look at. But you can see some of the negative projections here into this week. So still negative projections on a lot of the companies, especially, in the defense markets. I mean, look at that. you're seeing a potential projection here of 6% negative. 6% sell downs on Big Bear, anticipating them to sell down into this $4.90 to, this is with from our last projection when they were at $5.40 or $5.04. But it looks like they've already sold down to $4.92. So they're kind of selling down, right? So the near term projections, this company is heavily reliant on Homeland Security for AI. But the problem is Homeland Security, that whole conversation in the government just shut down in the United States, said we're not going to be given any more money for Homeland Security. So Big Bear AI now has some short-term headwinds they're going to be facing. They're going to probably see some backlash on policy. Ever since the government shutdown news started to come out, we started to see them sell down. And why does that affect them? Why do other companies do well when the government is not organized, while other companies don't do well at all when the government doesn't have things together? It's because some companies rely on the government to pay them contracts, like Big Bear, because they're in the defense market. They're a defense AI company. So while they're AI, they're primarily in the defense market. So that's why it's really important to understand as an investor, some of the macros, some of the big things that are happening, in the market. Because if you might be right that something is going to go up in the future. I'll give you a really good example. I remember one time, we saw that there was a lot of new things coming out with Netflix. One time my wife said, I think Netflix is a really good investment. And I remember thinking, that's okay, I'll take a look. And Netflix was actually coming out with a lot of new stuff that was giving them a market edge, and they came out with good earnings. But I don't know if you guys saw, Netflix just dipped huge, right? So why would Netflix still dip even though they came out with good earnings? A lot of times you see that happen because while their earnings look good, everything looks really great in the company, if there's news in a greater macro, meaning the whole economy, the world economy, being negatively affected by tech disruptions, because in the same week you had AWS go out, and you had Netflix working and relying on that AWS, and AWS wasn't working, so their stock tanked. And so there's things that might be acting macro that could affect the short term. So just keep that in mind. So once again, Big Bear AI, I really like the long term in where they're going, but the short term, you got some defense AI companies got some headwinds, especially Palantir. If you look at Palantir, they're selling down. They're in a similar position as Big Bear. While they've come out with new technologies and they've been innovating with their drones, new drones. Have you guys seen the new drone technology? They got new drones that are basically AI powered. I don't know if you guys have seen the satellite imagery. Satellite imagery is becoming very big. It's becoming real time. But while they're a good AI company, they also have some heavy reliance on government contracts. And when the government has shutdowns, that's going to negatively impact them. So we see that. So once again, to get out of the whole negative impacts in the government and things like that, I would like to just bring you guys' attention to some of the AI companies here in the data center markets and also in the space tech markets. So first, I want to go into the space tech markets. Some of you guys have seen some of the moves recently. You had Redwire make a 30% gain in a day. That was excellent. We saw them go from $4 a share back up to $14. But I see in the chat here, you got Will Masterson is looking at Rocket Lab. And so I'd like to go to the data center AI companies too with that one, like Peace and Happiness is IREN. That's one to be looking at for sure. And BITF, let's have a look there. But when it comes to Will Masterson's opinion on Rocket Lab, right? So when I first started investing, one of the companies I remember buying was Rocket Companies. Okay, this was about 10 years ago. It's called Rocket Companies, not Rocket Lab, Rocket Companies. And I don't know if there's still a stock, but I bought this stock because I was so excited about the space tech. All right. I was so excited about where space was going. I live in California and I've moved around a lot since then, but now I'm back in California and I can look up and see satellites. And I remember thinking to myself, this Starlink and everything else can be huge. I remember buying rocket companies and then watching it drop. All right, this was 10 years ago. I was still learning things. All right, had about 12 years under my belt now. But when I was first starting about rocket companies, the stock dropped about 50%. Stock dropped 50%. And I remember thinking to myself, well, this is such a great market. Why is this not going up? You know why? I didn't understand the financials. I didn't even understand what it meant for a company to bring value in the marketplace. And so I ended up missing other companies that were much better and losing on that one, that rocket companies, right? But Rocket Lab, Rocket Lab is a company that I've had some of my best gains. In fact, I have a friend that works at Rocket Lab, and he introduced me to Rocket Lab at $3 a share. And I've had some long-term holdings, and this company is excellent. It's at $76 a share now. It's been a tremendous year for Rocket Lab as it's gone really in the span of a year. It's gone from about $10 a share to about $99. And we see it pull down. So with Rocket Lab, what you don't want to do is just buy it the same way I bought that rocket company, right? Where I said, oh, I'm just going to buy it because it's going big, right? Because you want to understand it. But let me tell you, this company has a really, really nuanced approach and a valuable proposition they're bringing to the market. If we were to pull up RKLB, all right, and we were to look at some of the insider trading that's happening and look at the institutional holding, all right, you'll see that there's more increased positions, according to NASDAQ here, than decreased positions. You have some top investors in the company from BlackRock, from Capital World investors. You got State Street and Vanguard, along with Morgan Stanley, Bank of America, investing more. And so why are they buying into Rocket Lab? And why has this company been going up so much? They're now up to 53% institutional ownership. Well, if you were to look at the projections as well, let's get into Prophecy RKLB. Let's see why this is. All right, RKLB, let's see what we got. Because when you pull up the Rocket Lab financials, RKLB, that will make sense. But when you look at their value they're bringing to the market, then things will really start to make sense. So some of you guys have heard of this AI boom that we're in, and Will, this is hopefully helpful for you, but Rocket Lab is end-to-end, and they have allowed other companies, they have helped other companies by launching their rockets. They have rockets that work, right? Obviously, Rocket Lab. They allow other companies to put the cargo, put their technology onto the Rocket Lab rockets, and then they launch their Rocket Lab rockets up into space, and then they deploy those products into space for said companies. And so they've done some serious launches in the last few years, including companies that are private and companies that are part of the US Space Force, NASA, European Space Agency, but a lot of satellite companies. And they're a top competitor with SpaceX. And they have real world usage. Real world usage is a big one here. They are definitely making progress in launching rockets. And so they got insider buying. They got some great rockets that are being built. And so when we look at the chart here on RKLB, they've been able to really capitalize on that value. They've surged to $100 a share, and they pulled back down to 76. So there are some immediate levels to watch, and I hope these trend lines don't confuse you guys. But if you just look at the nearest resistance level here at about $79 a share, okay, that's going to be a level, a previous resistance that they're currently kind of breaking below or trying to hold at this $75 or $77, $78 right here, this previous resistance. That was back in December. And they pulled down, they tried to hold this level a few times throughout January, and then just into Sunday, pre-market hours or after hours, you could say today, they've sold below that $79 range. They're selling down to about $76. So the next target for them bear would be this previous resistance here. Probably a little bit more conservative would be like that. And that they sell down into this level here around $70 a share. So they are having some downward pressure. And I like that Rocket Lab has been pulling back because they essentially have been on a very, very bullish upward trajectory. So that's why we have multiple levels. If I wanted to delete some levels, I could, and you would see that things start to make sense. But they have multiple levels that they're trending up in. Okay. But in the nutshell, if you were to just look at their trajectory now, they are approaching a previous resistance here, right here around the $70 to $75 level that they might hold. And that would be the hyper bull case and continuation for Rocket Lab, that they are able to hold and continue some of this bullish momentum up into these levels of around $100, so like 25% increase. So Will, just to keep in mind, they're still up there. Their market cap, meaning how much their total value of their company is about, on average, about 1/10 the size of SpaceX. And so while they have a large market cap now of about 42 billion, they've grown into it quite a bit, and they're still having a negative net income. Not bad, but some other space companies are looking to turn profits. They're still not turning a profit, totally fine, but their revenue, it's definitely jumping about 40% per year. They're up there, but it's at about 150 million, and their total cash is about 2 billion. So they only have about 1.2 billion in equity. Only 1.2 billion, right? But actually, if you really look at it, it's really not that much, because their market cap's at 42 billion. They don't have, you could say, as much of a cushion as you'd like to see for a company valued at their current valuation. So what would you like to see? Well, I like this company. I think they're going to be great in the long term. We do see some downward pressure. So let's see kind of how it looks. Prophecy AI is definitely anticipating some negative pullbacks here. Even into the next day and into this next week, you see some red here. Okay, so anticipating more of a sell down. And this is just using all of the data that we normally use. But also, if you look at Rocket Lab and you look at them compared to other companies, all right, so I don't know if you remember the exact numbers, but they're doing about 150 million, all right? So while they're in the AI space, they do have some AI stuff. Really where they're growing is in their space tech that they do. And there's another company called Redwire, and Redwire is at around 100 million in revenue. And they have about the same amount of equity at about 1 billion. So about the literal same financials, minus about 50 million in revenue in the last quarter. Okay, so they're just a little bit less, you could say, than Rocket Lab. But their market cap is at 1.9 billion. Why is that? Well, Rocket Lab has a nice domain. They've got the actual rockets. Redwire, they don't do the launches, but they have all the infrastructure they're building in space. And so Rocket Lab deserves a higher valuation. But still, they're trading at a premium. You see them start to correct back down. A very, very, very conservative approach would be that they'd sell back down into trend around $50 a share and hold around here. That would be very conservative. But in the near term, they got downward pressure. Trying to hold this $70 level is where they're at currently. So if they hold that $70 level, they may continue and bull up into that $100 range. They might make that 25% increase. But just as a short-term investor, I would have a lot of caution at these levels. And I probably wouldn't hold too many long-term position or short-term positions if it continued that downward pressure, right? But in the long term, they look really good. I think that they're in the long term, 5-10 years from now, they're going to be a $200 plus per share. This company is really on it. And I know that because I have some friends that work there, a friend that works there, I should say. And I think they're going to do really well. But again, in the short term, you got that downward pressure. And you see that across the markets too. Okay. All right. So we got Carl here. Carl, how are you doing? Joshy, you got JZev, Todd, Redwire analysis along with Rocket Lab. I love that. Yeah, GMC. y'all in chat, what do you guys think will happen this week? Will the bleeding and the crashing continue, or V sharpen recovery? Will, what do you think about IREN? Let's get into IREN next. John Hopkins says, if we bleed, I'll be ready to open and strengthen positions, especially in the defense and DC sectors. Let's go, RGTI. All right. So I hear you guys. You know, when it comes to, and you got Hive as well from, you got Brian or Brianna. I'm not sure if it's Brian or I think it's Brian Aragon. And then Durante, good evening. How are you doing, man? Gordon. So this is the key here with looking at the market in this recent pullback. Once again, super normal. This happens all the time. We always see this type of movement in the markets. In fact, if you look at SPY, guys, whatever you saw or think you saw on Friday, I just want you guys to look at that dip that a lot of people, I see, so on one hand, we have, oh my gosh, are things going to start dipping and continuing to drop more? But then on the other hand, you have some other investors here that are like, oh, I'm ready. Let's go. I'm ready to buy some. Everything's so high, right? And so I'm kind of on that. I'm on that level of, all right, hey, I'm ready to buy some more. But let's not forget what dips look like. All right, tariffs introduced beginning of 2025. You remember? That's a dip right there. That's a market crash. All right, the crash or whatever people are saying from Friday, just look at SPY. These are the top 500 companies in the world. If that's a crash, I don't want to know how you feel in a real crash, because that's just, you guys, that's not even a pullback. A pullback would be 15%. We're still in a hyperbole mode with this recent sell-off, and so I wouldn't be surprised if SPY sold down all the way to 650 or lower. That was nothing that we saw on Friday in the long term. So if it really hurts in a move like that, then it just means you might be overexposed, and it just means you probably need to take some extra evaluations of how you're distributing your value. Make sure you're managing your risk correct. Make sure you have the plan and the systems together so that you're not hurting on those types of moves. Because I can tell you, even from trading this last week, that we still had some positive gains this last week. It's not a negative week for us. And you might say, well, how's that possible? The market's pulled back. Well, on any short-term trades that we had going, we actually were very methodical and we had very clear risk management. In fact, I don't know if it's still going. Do we still have this trade going that we entered? I want to get into data centers. Yeah. All right. It hasn't moved. But we had a trade we entered here on Friday, TSSI. We bought this dip down here. It's currently even up a little bit here. We had some other trades we were going. I think we're trading IREN, were we not? So we could go take a look at IREN as well as TSSI was up. And so I tell you that not to tell you like, guys, look at me, I'm making money while other people are not making money. I'm saying the risk management that you have will determine the value that you keep. And so it's really important to have that squared away. Okay, next one. Let's get into it. AI companies that are absolutely building the infrastructure. One of them that is just getting kind of blown up in the chat a lot, people are talking about it, it's going to be IREN. Okay, IREN. So IREN, we saw them pull down here recently, and let's take a look at what this stock is up to. They provide data center resources. We saw them pull down pretty hefty pull down. Look at that. They went from 63 down to $49 a share. All right. So I've traded this stock quite a bit. And what I can tell you, just the last quarter, 2 quarters following it, is it's a super volatile stock. I mean, you see swings that are 20% up, 20% down. All right. That's part of the data center market right now. But there's a lot of reasons why this company would build a lot of value long term. So you can see some of the nearest previous resistance levels that it's going to be fighting into, and it's going to be selling down to here. You got a previous support level as well that is right on that resistance around 48. It's currently at 50, but we just saw it pre-market or after hours here Sunday sell down to about $48 a share. Okay, so we saw it get down to 48. So they've sold down pretty aggressively. Not anything to be too alarmed about, though. I will say that, if you're looking at that sell down, once again, you can kind of see overall trends, not too bad. Kind of keeping the overall trend. I could see that it's alarming, but it's quite expected. We just did a top 3 data center video, I think it was, and a top 5 space tech video. And I'll tell you that in those top 5, there was only probably 1, maybe 2 of those top 5 stocks we were actually saying might be a good buy right now. But for the most part, we're saying these are top 5. They're great companies, but I even wouldn't trade them right now because of the risk and how high they are up here, right? Because they might be great long term, but look at that big surge in the short term. I get excited when things are red. People think I'm weird. I love the red. Okay, so when you see the pull down here from 63 to 50, totally normal. In fact, I'd watch that $50 level, see if they hold at IREN and potentially can still bounce up into some of these levels back into about $55 a share. You got this level here, $55, $60. That's actually a 15% swing that we potentially could be looking at. We might even assess that at market open. So what does IREN look like medium term? Well, have you guys ever sit down? I'm sure you guys have, you're investors. Have you ever sat down and listened to an earnings report call? It's where the company shares what happened in the last quarter, right? And it can be boring sometimes, but I will say the boring stuff is actually where you probably will notice that's where you're going to make the most money a lot of times. But if you've ever sat down, you know how boring it could be when they're like, the third quarter numbers for the fiscal year 2024 came in with revenues of blah, 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 and our net income was blah, blah, blah. We expect, right? You're sitting there listening, and you're like, okay, sometimes you just got to go away, right? But what I'll tell you is there's this undertone where it's like you have the guy talking, he's like, we've seen quarter revenues of 100 million, and we've seen a lot of increases from the AI markets growing, and you see them like pick up tone a little and they're like, and the AI markets, and then you listen to like Microsoft and Apple and Tesla, and before they would say like, so we've sold more product this year, but now in the last few years they're like, and we've added more AI products, and we are adding more AI, and you hear them talk about AI, and you hear them talking about data centers, right? And you say, oh, we're building this data center, right? And so this is something that's happening. And what I realized is that they are even right in front of us telling us who they are paying the big bucks to build these data centers. They're telling us we're paying this company to build this. And so then you could go find the publicly traded company. So a good example here would be IREN, all right? IREN stock. You could go find the company. You can go into the news, and you can even see that this company, IREN, announced back in November, here it is, that they secured a $9.7 billion AI cloud contract with Microsoft. Now, this company, when they were securing this contract, they weren't worth anywhere near what they're worth now. Okay, so this is the cool thing, is that these contracts are coming out and we're able to see them early. But IREN, back at this time, if you go back 6 months or back into November, for example, or around here, you'll see that they were trading at $40 or even trading at $18 a share, which was literally like $3 billion in their market cap, right? They're at 15 billion now, right? And so they're still growing and there's still room to run. I wouldn't say that we're anywhere close. I think we're still on a base level, but there's definitely some stability that needs to happen when you have these big investors, big banks buy. It means that now you have the stock's gone up big time. They're going to see some corrections. So with IREN, for example, if you're looking at the locations, They got Texas data centers under construction, Childress data center. They have Mackenzie in British Columbia, Canada, Canal Flats, Prince George. They have AI data centers. And once again, they're signing billions in deals as they've acquired a massive number of these NVIDIA GPUs to power their AI cloud. And they rent out the compute to companies so that they can use that computation, that computational power to run their AI companies or run their companies in general. And so they're AI driven. They're one of the top companies that has been building data centers. And their financials are not bad. They're up to 15 billion, a little bit of a premium, but they're doing about 384 million positive net income, and they got $4 billion in assets. They're priced fairly. They might sell down a little bit, but look at that PE ratio. It's at 31. It's really not too crazy. We've seen some data center companies with a PE ratio getting up into 100, Palantir or more. They're not data center, but you see it all the time. I have this book next to me. I don't know if you guys could see it. Let me see if I could pull it up. You guys could see this book. Really key book here. So this book is called Value Investing. All right, Benjamin Graham. Benjamin Graham was the mentor of Warren Buffett, and this is testimonialed by Warren Buffett, greatest investor of all time. And you might say, Will, I don't care. I want short-term trades. I want to make money fast. Okay, I want to tell you something. The short-term trades require the same amount of patience and the same amount of value and understanding as the long-term trades, okay? Because there's more margin for error on the short term, so you want more things working in your favor, all right? So let me read you this little excerpt from the book, and I don't need to go crazy, but it's kind of about the spurt of growth, okay? So listen to what this says and how they view the company. Okay. Management expanded its customer universe to include non-government, professional, managerial, technical, and administrative workers. These decisions broadened the market from 15% to 50% of all car owners. This is for Geico. But again, risk levels for this group were relatively minimal. Additionally, the company spun off government employees, life insurance, and several other subsidiaries for which Ben and Jerry became founders. The company's expansion was phenomenal. Geico soon became the nation's fifth largest automobile insurer by 1972. When the company was performing at a peak, the single original Graham Newman share had grown worth to 16,339. Now, they originally had acquired shares much, much less. But I want you to hear this. By 1972, they had grown in 16,349. Ben estimated that the total investment had made a market gain of somewhere around 300 million. So if you go back in the book and you actually read how they made this investment, you'll note that one of the top indicators that they looked for was that the market cap was still smaller than their total assets and the revenue that the company was making. And so if there was one indicator I had to give you, it would be this. When you're trading the data center markets, the financials, if they line up, it's probably an amazing deal. Because when the data center companies are growing, a lot of times what happens is you're having these deals come out into the news about the 9.7 billion or APLD signing that AI infrastructure deal for, up to 15 billion. And what happens is you look at their financials, and their financials have not yet reflected the new deal that they just signed. So it can be risky because sometimes that deal doesn't go through. But if you find a company that has a large balance sheet, meaning they have a lot of assets, and they're already seeing, hundreds of millions in revenue, but their market cap is still just a couple billion, or they're still very small, the market cap is good indication that they're going to grow into something bigger. If you see a low market cap on a company that's, making multi-billion-dollar deals. And so that's just a prime indicator for AI data center companies. And I hope that's helpful for you guys. So Did I make an ad for Robinhood? Yeah, I made some ads with Robinhood. Yes, I have. And Robinhood is a company that is very generous. We've been able to do some deals with them, and I don't know if you guys have seen any of the ads on social media, but I just got a text today. I guess they put some live, and I think they're putting millions potentially. I don't know if I mean, I don't know if I can really say that, but they have about 3 million impressions on just one ad I was looking at that somebody sent a text to me that they saw with my face on it. It's kind of crazy. Really cool though. Yeah, so you might have seen that. Took some profits from Redwire recently. Thanks. Yeah, of course, Akil. I'm glad you did well there. And so when it comes to some of the top AI companies in the data center markets, I like TSSI. I like APLD, but it's not that I just like them. It's primarily driven by the real world usage. You're seeing APLD grow and IREN grow because they're signing some big deals. And so any pullbacks that happen on IREN, for example, might be seen as really great opportunities. It would be conservative, but if they sold down to 25, that's APLD. If they were to sell down there, we'd be approaching it the same way as last time when they sold down to $25 a share. So they might tell you, and you might see a lot of news online, guys, about like the market's going down and just to be scared, or that everything's going down. It's super normal with the volatility you see. It's just really important to manage the emotions and know that this is where opportunities will come up for any long-term investments. But that the short-term opportunities, I think if things line up, we might actually be able to see kind of a rubber band effect as well. We get to see a really nice recovery. And also you might, even if we had extended downturns, if momentum was heavy, we might even be able to play some of those as well if we see specific markets that are getting negatively impacted. So what else do we got? We have, what else do we have? John, I really like the, thank you for sharing your results over there in Prophecy. Appreciate it. You got Hive stock. So Brian, I haven't touched Hive stock much, but it is on our data center list in the AI markets. But we went space tech, we went data centers. So that was good. Veritone. Okay, I'll take a look at Veritone for you real quick. So that's going to be VERI. So in my experience, I found that this company was manipulated. So I've never covered it. I haven't covered it because of the manipulation. I saw a lot of people that ended up buying it because of YouTube hype. So just watch out for that. But we could touch it here. Akil and Sostenes. Good for you, bro. Get the bag. Hey, appreciate it, man. Yeah, it's always good to work with Robinhood. And if there's opportunities that come up, it's good. You know why they worked with us, or why they said, is because they liked that we didn't hype stocks and that we just told it how it is and give good analysis. So that's always good. But yeah, let's take a look. So Veritone 3.72 current price, so $3.72. The reason I don't touch this stock here is because they were heavily manipulated. I don't like to touch manipulation. I just stay away from it. Those things can continue to keep going without me. I don't want to get involved with it, right? So when it comes to the stock, what does it mean to be manipulated? It means that you have a lot of fake news. You have a lot of articles that come out, probably even people getting paid to talk about the company, about things that may or may not be true. And so you can see they jumped to $50 a share and then sold back down. It was a pump and dump, right? And so now they're pulling back down. They made a run. They recently pulled back. And I saw them pivot. I don't want to do any negative talk around the company. I'll keep it brief here and just give you the facts and actually take a look at the financials as well. But when we look at the stock and you look at the financials and we look at what they do, enterprise AI for the data economy is what they market. Transform unstructured video, audio, and text. Building the future one token at a time. They don't say what is involved in these partnerships, but they have these, or if they're partnerships at all, but they have these Amazon, EPA, CNN, NCAA, and FedEx all kind of commented here. All right. Commercial. Get more from your media. They say less task work, talent acquisition, and other industries. So one thing, it's not necessarily a red flag, but it is something to watch out for, is if a company is doing many things at once, sometimes that means that they're not having success in one thing. So they're trying many things, and they might not be having success in any of the things that they're trying. But let's take a look at their financials. Hopefully I'm not sounding pessimistic. Quarterly, they are up revenue. Annually, they are down about 7%. They've seen declining revenues since 2022. However, they do claim to be primarily an AI company. So something's not jiving, right? I mean, if you're an AI company, how are you losing money? like an AI company in today's world is probably one of the best companies you could start. So strange. But anyway, you see some revenue declines. They're at about 7% negative. Their net income has improved. And then their last quarter, they're still bleeding about $50 million they're spending as their negative net income of about 26 million. But their revenue is up about 32%. So they did jump a little bit. And they're maybe going to do 100 million in this year, which would be a little bit more than 2024. So they're fairly, you could say, stable. But they aren't really looking that favorable there. Let's take a look at the balance sheet. Okay, things look better in the balance sheet. Last time I looked at, well, they don't look that much better, but I did look at them back in September 2024, and they had more liabilities than assets. You can see that orange greater than the assets. So I didn't cover them because I would never introduce stocks or cover them significantly for you guys here on the channel or anywhere if I know that they have a risk of bankruptcy, which if they have more liabilities than assets, they could be called upon to they have to pay that debt. And if they don't have enough cash, they might have to file bankruptcy. So you don't want to follow companies that have negative balance sheet. You want them to have more money and not have debt, right? So in this case, they did reduce their debt though, down to 184 million. However, their assets only about 200 million. So they only have about $16 million in equity. And as we mentioned, like last quarter, they lost about 26 million. Right? So if they lost net income negative 26 million, if they do that again next quarter without raising money, then they potentially could be in a position where once again, their liabilities are greater than their assets. So that's why I just don't cover them. I know that they might have a lot of hype on YouTube and there's a lot of articles, news articles, things like that. And people talk about them, but I just personally wouldn't invest in them. I could go deeper into product, but financials just aren't quite lining up right now. They look distressed. So unless there's like a specific product announcement that you have that would be really innovative and that you see they're really tapping into some new profits, I probably wouldn't cover them now, but hopefully that's helpful. I totally respect you're looking at them, and maybe there's something you know that I don't know, but I would probably stay away. All right, anything on CTM, A-Pal says. Yeah, so CTM stock, you're probably looking at a different approach. CTM is in the defense market, so they have downward pressure right now, but they've been consolidating. You kind of see this level here, this support level, and they're looking to hold around this 87-cent price point. This company is very small market cap, which means they have a high risk, but this company has very disciplined financials, which means that they also are growing. You can see their revenue has been going up 25% year over year. All right. So the quarterly growth, see that? Their net income was positive, meaning they didn't lose money. And then their balance sheet was at total assets here of about 46 million with their liabilities down. You see how that looks so much different? Look at this here. And then let me put it side by side with Veritone. So you can see the difference here. So once again, balance sheet here, CTM versus Veritone. Do you guys see the difference? See how the orange on the left for Veritone is like as high as, if not surpassing, the blue? That means they have like high debt. On the right with CTM stock, they have a growing blue and a declining orange. That means that they are very disciplined and they have much less debt than their assets. So that's really good. All right, so do you see the difference? How the company operates? Like, for example, we have a company that operates, and we have Prophecy AI, which I would like to search up CTM here. Let's actually do Gemini. Curious CTM. Let's do a Gemini search on Castellum Inc. All right. So while their financials look good, they also have agentic AI, and they're not hyped up. They are a company that does agentic AI and cybersecurity, primarily cybersecurity and defense tech for the US government. Okay, so they focus on electronic information, program support, data analytics, warfare technologies, artificial intelligence, software development, systems engineering. But what I like is that they continually gain contracts. Their CEO was previously in the Navy, and they had a $100 million deal, while their market cap, okay, they got a $100 million deal from that contract from the CEO. And then they got another $60 million deal recently related to $66 million related to an open contract for cyber support and security. So they got about 165 million in their contract backlog, okay? And their market cap is only at 86 million. What does that tell us? Once again, it means they have much more growth, much more assets and income than they do in their market cap. So they could be seen as potentially undervalued. Higher risk as they're still low, but institutional ownership is extremely low. It's like 5 to 10%. So right now, no banks, no institutions have jumped in, except for a moment here back in December when they popped to 280, sold back down. It was just about 150 million in market cap they grew, but it does look dramatic. But yeah, I follow this company. I hold this company long term. I actually have some long term positions in CTM that I entered at 87 cents. It's consolidated for the last year, and the long term looks really good. In the short term, even, I'm starting to see them potentially find support here around 88 cents. And I think we may even look to enter if we see some of the government shutdown stuff subside. This might be one of our top small cap defense trades that we would look for with proper risk management, of course. So that's going to be the case. You can see some of the negative projections as well when we're looking at Prophecy AI, looking through Gemini. We give them all the SEC data and everything else. A little bit of green into the week, negative potentially in the next month. But no, looking pretty bullish into 2026, up into over $1 a share, holding above $1 a share. Still not super bullish, but you do have pretty good insights for CTM. So when it comes down to the special AI software you're seeing me use here for the projections, this is Prophecy AI. And we have some really cool announcements that you might want to not miss. It's going to be in the first link below if you want to see the latest on Prophecy AI. And then when it comes to our daily live trading sessions, guys, we'll be there tomorrow morning at market open. So right at 6:30 a.m. Pacific Standard Time. It's pretty early if you're in California or on the West Coast, you could say. But every day at market open, we're there. Would love to see you there. I did actually have our extended offer. So normally for Stockmates, you're going to pay a subscription, or for Stockmate, that includes here the whole community. You can see some of our community. We have over 30 millionaires. Okay. We have a bunch of investors that are here, and we also have some beginners. But if you ever want to send me a message, you can. And we have stock targets for the week as well that we'll come out with today. And then you also got live trading happening in 12 hours. And so if you want to get the community, get a free t-shirt, and join our live sessions, we did extend the January offer. It was supposed to close at January, but some people missed. They said, hey, well, I don't know if I'm going to be able to get it right on Friday or when we were closing it for the end of the January New Year offer. But if you would still like to claim it just for the next 12 hours, the offer there is there for the New Year offer for stock meet. So if you'd like to tune on into our live sessions tomorrow morning, see my entries and see my exits, as we are there every morning and we share our live trading. And you also get to kind of get an outline or outlook on the longer term perspectives in the market as well. We're there every day for about 30 minutes. And you just got to go enter your details in the link below. Second link in the description. If you want to get Prophecy AI included and get stock meet for free as a bonus, then that's the first link in the description down below. And I would also encourage you to simply have a look. I appreciate you all. Thanks so much for tuning in. If I earned your thumbs up, definitely hit the like button. I'm looking forward to seeing how the markets react into Monday. If we see this short term or if we see a little more pressure, and let me know your thoughts down below in the comment section. And I'll see you in the next one. Thanks for watching.